What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 18th of 2018. Well, folks, today we have a lot of exciting and important things to talk about here on the DataDash channel. I do want to say that I appreciate you all's patience. I know I've been a little bit absent on content. I've been attending the Pillar Unconference in Vilnius, Lithuania. It's been an extraordinary time so far. But as you all know, crypto markets do not sleep. And as of recent, there's been a lot of exciting price action, followed with some really intriguing news, which is going to lead me towards talking a little bit about the macro level of things. You guys know I like to get a big picture, so we're obviously going to be talking about that. So let's go ahead here and talk about what's obviously got everyone excited. We have finally seen some serious green price action with a decent amount of volume as well in crypto markets, outpacing a variety of weeks of very low volume in the market. This has been about a $1,000 jump in Bitcoin's price over the past 2 days. It's been less really than about 48 to 72 hours. And this is probably the best price action we've seen since back here in April when we got the rally from around $6,000 to $10,000. So many people see this as a sign of hope for crypto markets, that we could potentially, yet again, test this line of resistance and break past it, continuing on to have an uptrend towards levels that we've seen before, such as 10,000 and possibly even higher. Again, you guys know I've set some pretty high price targets because I've been confident on the ETF coming out for Bitcoin, and we're going to be talking about that later on in the video. Either way, this is definitely setting up for a potential opportunity where we could either do what we did back in 2013 and 2014, where price was correcting, and we revisited, the highs of one of the previous bounce offs of the level of support that it held around $400 back in the past. I'll go ahead and show that for those of you who haven't seen it. Generally, I'm referring to this range of price action where Bitcoin was able to hold support after a steady correction in markets, and then obviously corrected afterwards down towards a lower level. So we might be seeing that, but as well as that, we also might have an opportunity to see this go towards much, much higher levels if an ETF is announced sometime in the next few months. So as we take a look across the board here, I want to really spend some time not only signaling the fact that obviously price action is doing well and that we've not only gone past 2 times the amount of volume we were trading. We've been in a very, very low volume market for the most part. We finally have gotten back towards around $20 billion in daily volume. I want to spend some time to talk about why this happened, or at least get a picture as to why this might have happened. Now, again, I don't like to always pin catalysts to things, guys. I don't always like to say, this is the specific reason why price is moving. But I think most people are generally associating this, and they have been since the past few days, really. There's been talks for a long period of time that a very well-known financial giant known as BlackRock has been not only eyeing Bitcoin futures, but getting into the crypto space. And it's kind of ironic as well because BlackRock itself is not only a massive financial institution, but it's been one that, much like most major either large financial institutions or investment banks, has generally hold a negative opinion on Bitcoin and cryptocurrencies. I think, for example, in the article here, for example, they had tied Bitcoin to only being useful for money laundering. Yet, as we all know, banks tend not to use Bitcoin and cryptocurrencies when they're doing money laundering, much like JP Morgan, who got caught for laundering hundreds of millions of dollars in cash, or at least one of their subsidiaries under Swiss regulators. So yeah, we tend to find that that's not the case. Again, same old kind of statements that you get from banks. But why is BlackRock flipping on a dime? For those of you who don't know about BlackRock, BlackRock is a pretty well-respected investment company. They have one of the largest balance sheets of assets, as you can see here, since 2017, $6.2 trillion of assets. Now, what makes up all these assets here? Well, BlackRock is a very interesting player in this case of talks of not only futures contracts, but ETFs, because BlackRock is one of the largest fixed income providers in the financial space. And that's a very fancy term for pretty much helping individuals with pension funds, long-term investments, usually providing ETFs to clients. People want to be risk averse. They don't want to be putting their money all in one thing, or these financial institutions themselves, they don't want to put their clients' money at risk in one stock or one industry. They obviously are diversified. And BlackRock has played a massive role in broadcasting ETFs to the financial space, making it common for ETFs for stocks, bonds, all types of different financial classes, even commodities as well. And because of this, BlackRock is a very, very interesting player. Once this report came out that BlackRock was potentially building pretty much a division within the company to explore options to get into the crypto market, it not only seemed as ironic in regards to their previous statements or some of the head positions and head leaders at BlackRock and what they had said previously, but it shows something on a macro level here. that not only there is massive potential that BlackRock could easily launch Bitcoin futures and bring in more liquidity into this market. Again, the more exchanges, the more businesses that start to offer Bitcoin futures is not only going to be a good thing in opening up the wider access to these markets, but along with this as well is something that I think many people are going to underestimate, and that is that BlackRock may as well go ahead and apply for a Bitcoin ETF in the future. They might actually go through and do this. Now, we have no serious confirmation. I'm not saying that, guys. I don't want to sell you a pipe dream in that sense. But I really want to emphasize here that when you're seeing companies like BlackRock and the CBOE and the CME not only talking about getting into these markets, just roughly, I mean, just even considering it, and also we had the NASDAQ as well quite some time ago, a variety of companies, Goldman Sachs and JP Morgan, talking about trading desks in crypto. The fact of the matter is we can see a paradigm shift here. There is a massive, massive change of mind in the traditional financial space towards cryptocurrencies. And I think that a lot of it has to come through a business sense because the one thing I pointed out a while back when Jamie Dimon was coming out, this was back when Bitcoin was at 5,000 going down towards 3,000. Jamie Dimon had called Bitcoin a fraud. We were seeing a correction in the market. At the same time, I think it was a week before or after, he had actually had to announce at the JP Morgan quarterly results that trading revenues were going to be down 33%. That's a huge amount of money, billions of dollars of revenue gone in a quarter. And where do you think that money's going? It's going in the crypto markets. And again, this is the catch-22 I've talked about with banks. They can try to regulate and suppress cryptocurrencies, and they're not going to have any luck with it. We know that this technology will continue to prosper, or they can get involved in these markets. They can have the infrastructure placed. They can have their financial products, their exchange-traded products like ETFs. They can have futures contracts. They can get involved in these markets. And with, as what we've been talking about on the channel when it comes to traditional markets, with an overextended market where we have the NASDAQ continuing to reach all-time highs, building up an ascending wedge, and we also have other indicators like the S&P 500 looking to potentially test their highs, but holding on thin ice after the sell-off we saw back in February. Equities markets are generally overextended, folks. We don't have the easy monetary policy that we used to have. And financial regulators, they know this. They know when interest rates rise that they're going to expect a correction in markets. This is going to lead to less trading. This is going to lead to less long-term revenue. This is going to lead towards these companies needing a new way to sustain themselves in a bear market. You can't sell ETF products to clients. You can't sell fixed income when there's a correction in markets because no one wants to buy when things are going down. They want things to be on a steady uptrend. That's the whole point of fixed income. So companies like BlackRock, these massive multi-trillion-dollar, institutions, well, I would say it's a multi-billion-dollar company, but it manages trillions of dollars in assets. These companies in the financial sector, they want a piece of the action, okay? So it's very, very important to know how they operate. And I think that, again, the volume and the price action we've seen doesn't even do justice with the not only the stuff we're seeing in OTC markets, the over-the-counter markets we've been discussing, but along with that as well, what's going on even in the upper echelon of the traditional financial space, the investment bank space, the fixed income space. This is where we're going to see financial pressure. And when you have, again, those three institutions, the CBOE, the CME, and BlackRock, and a variety of other companies coming into play saying that they want to get involved in these markets, it's showing to financial regulators that there is a sense of maturity in these markets, that people want to get involved. So, anyways, again, I can ramble on about it forever, guys. You guys know that I'm generally watching to see if we're going to break past this line of resistance. I'm not going to get too excited until we do. I think we need to see some more volume like we saw back off the bounce in February around 6,000 that we saw back here in April. I would really like to see a breakout in volume past this line of resistance. And along with that as well, we're going to be watching if Bitcoin can get past 10,000 or, we might be able to potentially even get towards higher levels than that. So I'm really, really excited about this, guys. Again, it's an evolution of the market here. We're opening it up to a much wider audience, much more liquidity. And I think through doing this, we're going to get markets excited again, and it's going to bring this into a more active trading environment, even specifically with real crypto transactions rather than the paper products that these financial markets are going to make. It's going to be really interesting, and I think it's going to make these markets much more sound and liquid. So I think there's a lot to win for pretty much everyone here in that case, and I've been remaining bullish on these markets, guys, ever since around $6,000 to $7,000. We've been holding strong here, and this is looking very, very healthy. So that being said, thank you all so much for watching. I'd love to know what you guys think down in the comments down below. Let me know what you think about markets. If there's anything I've missed at the moment that's generally exciting you at the moment, I'll try to produce more content, guys. I apologize. Again, the conference has kept me up a little bit. It's kept me busy. I've gotten to explore the city a little bit, do some master classes, some speeches, sit on a few panels. It's been really, really fun so far. But nonetheless, I'm still keeping up with markets. I'm still here, guys. So if you have any questions, leave it down in the comments down below. But until the next video, thank you all so much for watching. Stay safe, stay smart, and I'll see you all in the next video. Stay tuned.